got the client fund, the client flow. We can look at that. All right, and you see what I mean? Like, and it's more laziness, or maybe people just aren't interested in the stuff that we look at, right? But if you're not convinced, okay, and I know it gets annoying because I talk about it constantly, but if you're not convinced of how important positioning, just even to pay attention to how players are positioned out there, after seeing what we just saw, what we're seeing in front of us in this market, I don't know what else you would need to see. You know, I don't know what else you would need to see. Like already, I'm already salivating, you know, because I'll be honest with you guys. And you guys probably could say the same thing because of how quick the market is. I didn't catch this rotation back into tech / then growth like I should have anywhere near it. You know what I mean? Anywhere near it. I benefited off of it just because I was aware of it happening. That's the plus to paying attention to this stuff. When something's going on, you're aware of what the hell's taking place rather than saying, oh man, what's going on out here? It doesn't make any sense, you know? So tactically, you could still take, you know, advantage of it in a decent way, but you know, just the opportunity. And if you guys, for some of you who don't know what the hell I'm talking about, hold on, let me post this. There's a couple things I want to look at today with you guys. So I want to post, hold on. For those of you who may not know what the hell I'm talking about, we've been looking at something on, you know, a lot of the member webinars, but I've been making a note to look at it on this webinar on Tuesdays so everybody can see what the hell we're talking about here, right? So I'm talking about this. All right. The beauty is, you know, you could take the lazy approach or the disinterested approach and wait for like the final verdict and just be notified of it and then plan and react. All right. But the beauty of these things is I like to see these things develop. You know, I like to see them develop. And that's how you can see them materialize earlier in the process. Because it sounds repetitive. This is something we talk about a lot too, but the market's so damn fast now. It's, you know, things happen so damn fast that if you're not trying to be early, even getting your eyes on something, you got no shot. You got no shot of putting actual physical money to work, right? Placing bets and being able to take advantage of it. No shot. And because the reason I'm telling you is I'm trying my hardest by a step-by-step process, trying to follow along the whole entire ride. Sometimes it doesn't materialize into anything, but I'm looking at the step-by-step process, and I still, you know, it happens so damn fast these days. And that's because machines and everything else. It never used to be like that. You know, you had ample time. You had time to build positions into weakness. Now it's like the first batch, and then it's gone. You know, so you got to try to be, you got to try to learn how to be early in this game. Again, it doesn't mean you have to put your money to work early, but you have to be aware of things early in this game. All right, so this here basically sums up everything we've been watching right in front of our eyes develop in the market. All right, if you're wondering what the hell's going on, what happened to interest rates, what happened to commodities, why are they buying Amazon, Doku, Roku, and the gang again aggressively? right? Today we're seeing size sweeps in those type of names. I can't believe my eyes, right? I can't believe my eyes. Why is that happening? This is why. Right here, this is why. Okay? And this had nothing to do with Doku, Roku, and Goku in the gang. This had nothing to do with whether their research was right. You know what I mean? Whether they knew what the hell they were doing. Right? You have some of the smartest players out there who were seeing the same thing everybody else were seeing. Doesn't mean they were wrong in seeing that. But what happened was it became such an obvious trade, right? We were talking about it on here. For a few webinars, we were talking about it. Okay? It became such an obvious trade that everybody had piled in and positioned for inflation so aggressively. They felt so much conviction, so bullish that the upside was possibly hyperinflation, right? You were hearing hyperinflation. You thought we were flipping back through the years, going back to the Weimar Republic, Germany days. We were on the precipice. That's what it started to feel like. Every time rates ticked up, right, they would sell tech. They want nothing to do with tech. Growth, high multiple stocks, get the hell out of here. With your money, I wouldn't buy it. That's how everybody felt about it, right? And this was the net result. Load up in commodities, materials, banks, industrials. Now, mind you, if you were early in this trade, or even not even early, but not late, you made a shitload of money, right? You made a shitload of money if you weren't late. But when everybody starts talking about it, and it's obvious to everybody, and you see the positioning, yeah, exactly. A lot of those names, Freeport, Nucor, these stocks were going up every day. I mean, look at a chart of lumber, copper on fire, all of them. Okay? When you see the positioning line up like this, all right, you have a pretty good idea that you're closer to the end of that. No matter what, no matter how things may turn out. Okay? Even if they happen to be right, the likelihood is there's going to be some sell on the news type event because everybody's already long. Everybody's already long. Okay? And again, you know, tech is something you rarely see this. You got to go into bear markets to see tech on the negative side. Just on the negative side, that's a big deal. All right? Then, you know, you have the Bover surveys come out. What's the most crowded trade, right? Even that's obvious now, but they still want to be long commodities because they think it's the right thing to do, even though it's crowded. Long commodities after Bitcoin got hit, right? Long commodities were the most crowded trade now. All right, and that just, it gave you a good idea of how extreme this positioning was. Now, any little thing, okay, any little thing to get that momentum going the other way, and oh boy, you have a lot of people severely offsides. Severely offsides. All right, and that's exactly what we got. I don't even know what the trigger or the catalyst was. All I know, not only did rates stop going higher, they started kicking in reverse, even off inflationary numbers. Right? Kathy was belittled calling for a correction in commodities. She was being made fun of because she was calling for just a correction in commodities that they come too far, too quick. And they thought she was nuts. All right, so this, and then, you know, this is not new. We've been talking about this, right? Especially those of you members are probably saying this, Jesus, this again. But, you know, just so you understand, this is what's been taking place, right? This is what's been going on. And now that egg has hatched, right? That egg has hatched. All right, so now me personally, and you guys could understand this, what I'm looking for now is I'm looking for, you know, what comes out of this? You know, what comes out of this? Are these players going to remain stubborn? Do they have that much conviction that they remain stubborn? And this rotation that we're seeing now into tech growth, and I think that the thing to focus on here is growth. Forget about tech, the rotation into growth, because nobody owns these things. Nobody owns these growth stocks. They've been shaken out. You had a massive shakeout in it. All right, so what we want to pay attention to now, and you know, there's quite a few ways to do it. One of the ways is looking at this, which is weekly. Okay, so this is, this is over the course of a month, June. See, this is showing you May in June comparison to May. Okay, we look at weekly how the positioning stuff develops, right? So what we want to see how players react to this. That's ultimately going, in my opinion, to decipher how this thing plays out over the intermediate term. Okay, you get a massive shakeout in these higher rate plays where they shake out enough of these sloppy longs, right? And you could very easily find the bottom and inflation can get hotter than you ever thought it would because nobody's in it to win it now. But if they're stubborn, you know, this rotation into growth, and this rotation into growth can be even on a larger scale, meaning that you can get a lot more names involved. There are a lot of growth names, okay, large cap, mid cap, small cap, that got destroyed. Like like a name like Peloton, right? There's not a bull to be found in that stock. You know, if players need to scramble to own Peloton, you see what's going on in some of these names now, the price action, when all of a sudden it hits them that they don't have any exposure in it. All right, so it can be on a larger scale. And here's the thing, and this is something like Charlie McElliott and Nomura was just talking about in regards to the overall market. This is how it is now. Okay, these extremes from one side to the other, back to the other, this is what the market is now. Very rarely are there those in-betweens anymore. There's so much crowding out there, right? That's why you see these crazy moves. You know, people want inflation names, commodity names, they go straight up like a rocket. All right, they want growth names, these things go parabolic, like they're never going to have a dip ever again. These moves are so extreme. So they overshoot to the upside and they overshoot to the downside. You know, so a lot of people think this is not going away. This is the new normal because of this extreme positioning that's been taking place. All right. So before we look at the weekly update as far as positioning is concerned from the client flow, I just wanted to talk a little bit about the market itself. Obviously, a lot of these names have had big moves now, right? Big moves. I mean, when we were talking even just a week ago, these things still, even though they were up a few days in a row, they had upside where even tactically you could still participate and ride them. You see the theme is on, the theme continues that day, some Roku action comes in, hop on and go for the ride that day. You could still do that. Now I think we have to be a little more careful because at the least the likelihood is there's going to be some sort of breather or a head fake, right? Because what usually happens is it doesn't go, oh, they're rotating back into growth and tech. Go there and make your money. What happens is a lot of people start to notice that they rotate, and then these things retrace right in their face, right? And they feel late, and then that's the next opportunity if you're looking to buy those things, right? So we got to be careful because this can definitely continue even over the short term because of how extreme the positioning was. But we have to be a little more careful now because what we may start to see are reversals, okay? Where Roku is up another 3 and then all of a sudden down on the day. You know what I mean? That sort of thing. All right. And the other thing too is, on the sentiment side, you had tech. That was when this started firing bullish sentiment signals, meaning players were bearish to an extreme as far as sentiment on tech as a sector. Okay. And now you have that approaching the complete other side. Right? So now on a short-term tactical basis, they're getting a little too bullish now, as they should based off some of the price action in these names. All right, so here we should be looking for a breather. Even for tactical stuff, we want to be a little more careful, okay? And then once we see that breather, we'll see how it lines up with everything else we look at ultimately to determine, which way this thing may go. Another thing on the sentiment side, we'll look at it today after this. The stuff that they puked up recently, financials, materials, that stuff, those were overheated, right? As far as sentiment was concerned. You had bullish extreme across the board there. A lot of those groups overshot to the upside through bullish extreme sentiment. Now you have the opposite, right? A lot of those, if not there, are approaching extreme bearish sentiment, which would be bullish. So the likelihood is they find some sort of floor and bounce. And some of them have already. So like we were talking about on the Sunday webinar, guys, there's a lot of things to pay attention to here, right? It doesn't have to, the next thing we pick up on doesn't have to set up as extreme as this. But that's what we're looking for. Because all the big moves, that's where it happens. When players are caught offside, right? When that trend changes, the momentum shifts, that's where these big moves, that's where they all stem from. That's where they all stem from. Like everybody's looking for a big rollover in, the indices, in the markets. Just an overdue correction, for Christ's sake. But it's going to be really difficult to see something like that when you don't have anybody positioned offside in VIX, right? And in SPX, right? You would think at this point where VIX is and markets near new highs that you would have players shorting the daylights out of VIX. Every other rally similar to what we're seeing now, even less so, you had the average Joe shorting the daylights out of VIX thinking it was free money out of all vol products. Okay? They haven't been doing that. They haven't been doing that. And as far as SPX, right, it's mostly used for hedging purposes. But when people get overconfident to the upside, they look at hedges as a waste of money. And what they decide to do instead of using SPX as a hedge by buying puts, they short puts, they sell puts naked because they don't think the market's going to ever go down again. Right? So then when you have some selling and you get naked put sellers caught offside into a pullback, that's what, cascades into further selling. So you don't have that, Joe, you don't have that in the VIX futures, and you don't have that in SPX right now. At an extreme, you know what I mean? Nowhere near an extreme. So, but the point being is that, offsides, players being caught offsides, a lot of times lead to all the biggest moves we see. Sometimes they take time to develop. The momentum doesn't shift right away, right? But the longer it builds, right, the more players continue to position in their offside. When that turn comes, the more vicious the move is going to be. Because think about it, right? No matter what they're doing, if they're selling naked SPX puts and the market starts to turn on them, not only do they get caught on those short puts, but now they also probably want to buy protection and hedge. So think about that move in this market, this day and age. Think about how big of a flip-flop that is. And all the crowding doing the same thing. That's what leads to these gigantic moves. And we're seeing it right in front of us here. We're seeing everybody now just not even unwinding everything, just starting to unwind and put some exposure on in some of these growth and tech names. That's what we're seeing right now. All right, let's look at this, and then I'll post. I got to dig up that sentiment thing. We can look at a couple of things. Here, last week. So they bought the dip in cyclicals and real estate. That's what they did last week. Now, if you remember, I think they were 6 straight weeks of outflows, 6 in tech. Coming into this week. All right, so you had last week the S&P 500. We know that client net buys were at a 2-week high as 3 major client groups, hedge funds, retail, and institutions bought stocks, led by hedge funds and retail clients. Clients were big buys, large caps. We don't care about that. Flows into real estate were the largest on record. That's the chart on the bottom here. Real estate. Where am I? Largest on record and positive for the 3rd week, perhaps driven by the drop in long-term bond yields. Clients also bought the cyclical sell-off, with the next largest inflows in the industrials, financials, and energy. The biggest laggard last week What was the biggest laggard? Oh, energy was the biggest laggard. Oh, those were the biggest laggard last week. Clients sold growth with tech, consumer discretionary, commercial services seeing the largest outflows. So they sold it more tech. Can you imagine? Can you imagine? Outflows out of consumer discretionary, 5th straight week, tech, 4th straight week, were both the 7th largest on record. Follows record tech outflows last week. In contrast, industrial saw the 7th largest inflow on record. That's pretty crazy, huh? Cyclicals led the inflows last week. Let's see here. Real estate, industrials, financials. Here's tech down here. Look at this. And this is week to week, the numbers here. All 3 major client groups bought stock, hedge funds. This is buyback, corporate, institution, retail. We don't care, large cap. There's no real read on that. The top one here, hedge funds. This is what they've been doing over the course of years here. Institutions, private clients, buybacks have been ginormous. Hedge funds bought across most sectors. Oh, this is what, ETF or no? So they bought financials, industrials. Look at hedge funds. This is hedge funds. Institutional clients, consumer discretionary, financials. It looks like institutions bought a little tech. Hedge funds were selling aggressively. And retail, so you got hedge funds and retail last week selling tech. Kathy Wood's going to become Warren Buffett. Right? Kathy Wood's going to become Warren Buffett over this shit now. So what it looks like here, it's exactly what the headline said. It's almost like they're doubling down. They're averaging down. They're averaging down. You know, the other thing that I was hoping for, looking for out of this sideways action we've been seeing, like in the S&P 500, because the market really hasn't gone anywhere. You know? The market really hasn't gone anywhere. And underneath the hood, between all these rotations, right, there's been all sorts of moves. But another possibility, okay, would be that the higher rate plays don't go bananas. You understand? Names that have pulled back will bounce. You know what I mean? Find some rallies here and there, more selectively, I guess. And growth would participate in the upside as well. You understand? So if you kind of have a Goldilocks backdrop where the threat of inflation is not there anymore, it doesn't have to mean deflation. You know what I mean? doesn't necessarily have to go to the other side of the earth and translate into deflation. So if you have a Goldilocks little sweet spot there where there could be participation everywhere. And you start to see a lot more names selectively perform on their own. It doesn't have to be this drastic rotation. And that's been the problem, guys, in swing trading. There's nothing else. That's the main issue with swing trading, since here. Right? The problem has been that you may be up in names, you may catch, if you're patient enough and disciplined enough, you can find the right spot of entry in a name. But if you want to give that name some room to move, after that initial rally, if they rotate back to the other side, that rally is going to falter and the stock's going to go right back to where you bought it. You understand? So it's more like chop you get stuck in, and it makes it a difficult environment to trade positions, swing trade. If you're playing quicker, it's easier. You don't see the same type of reward, obviously, but you can avoid getting caught when whatever you own is out of favor. It's a good example, like this name here, MasterCard, right? Caught some nice action too. But depending on what week you look at the stock, oh, MasterCard looks good. Wow, that action, I should have played it. Oh, thank God I didn't play that MasterCard. Oh, MasterCard new highs. I should have bought that with time. Oh, thank God I passed on that MasterCard. You know what I mean? Every week, you sing a different tune. This is what swing trading has been. On the winners, this is what swing trading has been. Swimming in pea soup. Because every time MasterCard made a move, they start rotating out to the other side, and then you get this. All right? Then they rotate back, you get this. Then they rotate out, you get this. That's been the tricky thing for swing positions. And unless you got lucky and really nailed the lows, you know what I mean? Nailed the lows, which it's not the easiest thing to do, like maybe like a Carvana, right? That August action into the lows. You had such a sweet spot there that led to a huge rotation. But that's one period of time here, right? Anything you bought there was such a great entry, and you would have made money on the swing. Anywhere else, it's been torture. Yeah, Trip, Trip we spoke about, same thing. All right? Trip, you bought it for the next 3-4 days, you felt like a king. Then what happens? Let's rotate out of reopening and massive rotation into growth. Stock came right back to where it started, and it's just dead right now, just dead. Just dead. So even buying it at a quality spot, you're still hanging in there. That's why you want to focus on quality spots. But this is what I think we have a chance. Like names like this, I think have a chance to participate no matter what happens. I really do. Names that have cooled off and gone into a little bit of consolidation, but doesn't really fit the bill, right? They're not a commodity play, and they're not hyper growth play, they're kind of in between. I think selectively we're going to start to see buying because there's going to be opportunities in these names. There's going to be opportunities. Like look at the hotel stocks. They look so good, but you got to sit and wait till they rotate back into these things. And this is what likely is going to happen if there's that drastic rotation. And you got to be in it before this happens, because you blink, you miss it. Right? This is a hotel. A lot of these look like that. Look, dead. They don't look bad. You know what I mean? So anyway, I'm making a point. That's what has made swing trading so difficult. That's what makes swing trading so difficult. And now, here's a problem now that we face. Okay, where you want to be in growth, right? Growth still looks like the place to be, but they've rallied significantly, and they could easily take a little breather. MGM, yeah, that's another one. MGM. There's nothing wrong with it. It just, you know what I mean? Stuck a little bit. And this one looks better than most casinos. So we got what's the ticker on that software ETF? I think that's at like new highs now. What the hell is it? IGV, I think it is, right? Oh, yeah. All right, so now you're coming up here. I mean, that's a powerhouse of a move there, Blew through, like this niner, there was a little dip. Same thing here, little dip. So strong. But you're talking about a big move now off this niner. Big move. So it may find, a little congestion here. It may find a little congestion. And what that means for some of these names that have been rallying in a straight line, like look at some of these moves. I'm sure you guys, every single one of you are complaining that you sold them or you missed them. I mean, that's the story with all these names. Right? All the studs too. Twilio, all of them. Even the big guys, Amazon. So we got to try to be smart here. What could happen is we see rotation back the other way, and it gives us something, to play while we wait for a little breather here. But, we got to pay attention. We can't lose track of it. You know what I mean? Rotation. It's a pain in the ass, John, no? But what are we going to do? That's when you have a market with QE out the ass, let's say a rigged market, okay, that's what happens. There's no corrections. The corrections are all under the hood. They're all under the hood. Think about it. Everything that got hot and needed a correction had a correction. And the markets didn't even flinch, right? SPACs corrected. Market didn't even flinch. Growth, Kathy names, massive correction. Didn't even flinch. Bitcoin, correction, indices didn't even flinch. It's amazing. It's amazing. So here's kind of what it looks like. Let me see if I get an updated chart here. Hold on. Bear with me. Oh, I don't have a new one. All right, this is yesterday's. We'll see what it looks like after today. Oh, and I got the other one. The other one's updated. Hold on, I'll get that too while we're looking at this. Hang on. Okay, here it is. So this is coming into today. It shouldn't move drastically off today, even though, the NASDAQ moved pretty significantly. There's usually a little bit of a lag, but you'll get the idea. Come on. All right. Right? So here are all the sectors that they were loaded up in, right? That they were crowded into. Basic materials, sell signal, buy signal. Financials, buy signal. Mining, almost. Industrials, buy signal. Okay, now here was tech, right? On the other side of it, buy signal, and we're going to get a sell signal. Look at the semis quietly doing that thing, cooling off. Yeah, housing too. But housing wasn't part of that extreme rotation, that crowding we were talking about. But yeah, housing, you got very close to a buy signal. Oh, biotech was the other one. Buy signal, and now banging its head on a sell signal. Energy's been in its own little world, but even that, doing this thing, cooled off a little bit. That's good. I mean, tons of flow and energy, tons. All right, so you see the issue we may run into here. All right, doesn't mean it has to stop on a dime when it gets there. Right, it doesn't mean it stops on a dime here, but you got to be careful. You got to be careful on new entries. The risk reward is not favorable. And the probability of you getting caught in something like this has gone up significantly now, just like here. So that's the problem right now. That's the problem. What do you guys think? So there's two ways to combat this, right? One would be, well, the obvious one's pay attention to the sweeper activity, okay? If sweepers are hitting underbelly names, okay, less liquid names, new names, that is a hiding spot. You can find alpha there, while big tech and some of the more, the names that have been hot, right? You can look at a chart over the past 2 weeks and you know what this is telling you about, what names, right? So that's one way. A lot of us who like to play equity can look towards that if we happen to see that. Another way would be to look for, at the least, if you don't like them and you're a big Cathie Wood fan and stuck on this growth transition, look for bounce plays in some of these groups. and allow tech to at least cool off to neutral, kind of like we've been doing in energy. Kind of what we've been doing in energy. But the most important thing I think to keep in mind is to the names that have already taken off are the names you got to be most careful with. A lot of big tech names, like they were sweeping weeklies all the way into the ding dong here. I mean, this one didn't really even take off. This was been strong already anyway. Microsoft, wow, I didn't even realize that. Netflix didn't really even heat up yet, did it? Had its best day today. But these names here too. You got to watch some of these names that have stretched a little bit too much. Maybe you get little dips in them. Right? And they can go a tier lower. So while these names maybe need to shake some people out and breathe, you get a name, I keep saying it, AI, right? That hasn't participated. And money can spill into this. Yeah, like Doku. I mean, look at this. All right? Like, you got to be careful here now. Look at this. You have no edge here anymore. Okay? Pink Panther, you have no edge here anymore. You haven't discovered, like when somebody comes up to you and says, oh, I like Doku. Okay, take it easy, guy. Who doesn't like Doku? Right? You got Pink Panther here. Like, you know what I mean? It's egg hatched. If you're coming in and saying you're buying Doku here, it's one thing if you're holding it. That's a whole different story. If you're coming in and you're saying, oh yeah, I like Doku, I'm buying Doku right here into Pink Panther, you're doing it all wrong. You're doing it all wrong. And Doku, caught some really nice action. And Doku doesn't catch a lot of action. Right. And then you're going to blame the flow. Oh, yeah, what happened to the flow? Doku pulled back. Yeah, look at that. So, there could be, and again, I don't know, they may all breathe at the same time. I'm just saying, if they go into breather mode and we start to see flow in names like this, or even continuation flow in like a snow, right? Or teledoc, you can possibly still have these outperform while the majority of them go into breather mode. No shorting. There's no shorting here. Like teledoc obviously is not overheated. You know what I mean? But we just got to be that much more careful because we may not have the wind at our back. We may not have the wind at our back. And the good thing, guys, the good thing about a lot of these names, the quality flow we've been seeing has been with time. You know what I mean? So if it's stretched too much, you don't need to chase it. Let it come in. Let it come in. Because if you're playing like September, October's, November's in a name, you're not looking for the 2-3 day move anyway. Let it see what happens. Maybe it comes in. Maybe it goes sideways. There's no sellers and it just goes sideways. It looks even more bullish. But you want to kind of see that first. And on the other side, let me pull the other thing here. Hold on. Let's see what I did with that. Oh, here it is. Oh, this is not. This is coming into today too, I think. Oh, hold on. I gotta crop this. How do I crop it? Whoops. I'll tell you that this was coming into today, but that late week sell off last week, unbelievable. By the way, you have rebalancing too. The Russell, if this market happens to get sloppy and sell off, that'll be another opportunity. If in the stuff we're looking at anyway. But you could see, look, well, if that pullback, energy, there was a big washout in these things. Materials, financials. So this was coming into today. Tech, you probably bump up into that red again today. So very, similar to what we were seeing on that other chart. All right, here's some of the, I'm not going to keep you guys too long tonight. Here's some of the top flow out there, some of the top bull bets out there today. There's a couple I got to add on here. All right. But you had a nice risk reversal in Freeport, September's. So if we start to see more of these type names catch action like this, you could have that setup that I'm telling you that everything, it's not drastic in or out rotation. Selectively, there'll be opportunities on both sides. Snow, they came in hitting the Septembers again. Nice size. This SDGR, this is a software name, right? SDGR. So here you got a little different look than some of the stud software names. They all have liner lows. It's unbelievable. You had a rally, got a little cooked here, and now just hanging out here a bit. This is software? How about space? This was the August sweep, and then there was an October bomb. I can't believe it. Sheesh. So if you guys remember space from back in the day, the stock is red, and you see orders like that come in, that's what you got to look for. That's what you got to look for. If they support dips with these type of orders, forget it. Here's Peloton, more action in Peloton. There was even a better looking sweep in Peloton. I think it was maybe 2 weeks ago. I have no sense of time. Look at Peloton. Last week. It was last week? I don't remember. It could have been, honestly, 1 week, 3 weeks, they fly by. I don't know the difference anymore. Six, seven. Oh, 6-7. Okay. Oh, so that was over here. Big, caught a big sweep, July 70s. Big lots. October 160. That sounds like the bat. This thing moves too, this big, huh? What did they hit again? July 70s. So a little more short dated there. Energy name, if you're looking for energy names catching action, you know, a hit list, a watch list on dips, there's quite a few of them. This MPC, you know, you only get big boy action in this name. You got Fang. Saw fun buying yesterday. You know, Oxy. Oh, look good. CP. What? That's back to new highs already? That didn't even pull back. This was one of my favorite ones. You know why? Because it doesn't catch the flow some of the other ones do. You know, the other ones are more active. They were throwing darts in this name. CPE. You know, and then you got the little guys too that have been catching flow. CVE, TEL. There's a lot of names, a lot of energy names, tons of action. Roku. I mean, they every day now, every day. And Roku was, you know, one of the stud growth names that was lagging a bit, you know? And then it got hot this week. Well, late last week. Micron, this is tricky. Again, unless they all find a way to participate. Yeah, this is not even that big of a bet for Micron, but it's a clean bet. July 2nd, more of a bounce player. This is a bounce bet, basically. You know, this is cyclical. A lot of these names, well, you know, some of them don't even look awful. Maybe they just chop around a bit. LRCX. A lot of us have been eyeing this name, been seeing nice action. Anybody still in the U? Yeah? Yeah, Fish, you rolled, right? All right. So you guys have some exposure. That's good. Yeah, I just had equity and I don't have any of it now, unfortunately. So July puts in you still holding. Cool. All right. So you guys still enjoying the ride there. This one, let me tell you, Carvana, we may not see sweeps in Carvana again all year. But boy, when they hit Carvana, they literally, I don't remember, it was one of these August type lines but there was initial activity in Carvana. They nailed the low. I remember because I day traded it off the niner. You see the niner? Had a niner. So I said, you know what? It's August, but it's a great spot. May 19th, Hussein's saying. So let's see, what date is that exactly? May 19th. Oh my God. That's literally the low. Right here. See that reversal that day? Oh, there's the bet. Oh my God. Yep. That's BS. Look at this move. That was like one of the first ones to start seeing some action in these names. Nuts. So, I don't know how clean these are. We'll see open interest, what rolls, what doesn't. Oh, yeah, used cars, right? That's what they do. Carvana, what they do boggles my mind. Like, what is it? I saw it's like a vending machine for cars. What the hell is it? You don't go to the dealer, right? So they send it to you? Man. I mean, have you guys bought a car like that? Really? Damn. That's amazing, right? Like, who the hell wants to be bothered with that shit? Oh, God. Roblox. We've seen better looking action, but you got a pullback here into a niner. Yeah. You know what what I'm definitely going to do, I think I'm going to buy just equity for my daughter's account. It doesn't mean I won't buy for myself, but I'm saying I wanted to buy Roblox for my daughter's account, just to tuck it away type of thing. Not trade it. Maybe I'll do that here off this yank. I know what Roblox does. I have a kid. You don't know what Roblox does for real? But is Roblox, this is still popular? It's kids go on there. It's like a social gaming thing. It's still popular? And they got pretty sick numbers, right? I know there was news that they weren't growing as much as they thought initially, right? That was the news, basically. Yeah, they live there. That's exactly what it is. They got their own life there. It's true. It's true. But listen, I know a lot of you guys have traded the stock. It caught, talk about moving fast. This was the ideal setup. A lot of us thought it may stay in here for longer because none of these growth names were heating up. And this thing went without the growth names. And they caught some nice sweeper activity in here. So this is your first dip off that move. So if you've been eyeing the name for an entry, I mean, this is ideal. Niner low, some action, and keep an eye on the action because they can hit this thing hard. Today's sweeps weren't as aggressive, but there's still decent action. But they tattooed this thing first go around. Tattooed it. So keep an eye on it next few days. Pinterest has been seeing action. Saw some more action again today. That got hot over the last couple of weeks. That's another niner here, a little Pink Panther. Maybe you get a little breather here. you know, or even a dip. That would be ideal. That would be ideal. You know, we don't want to see them all just do this through Pink Panther, because it's not going to last. It's not going to last. You know, you want all the late arrivals, all the riffraff coming now into these names. You want to see them wear them out a bit. You know, you want to see them wear them out. Sometimes, you know, a lot of these moves have come a long way, so it's almost like even too far gone for that. But a lot of times you even see them, you know, come down a bit. You know, and everybody thinks that these growth names are dead again, but they hold lows, and then the big move comes without everybody in it. So that's what we got to. That'll be the healthier move, the more sustainable move. If these things just pop through Pink Panther here, right? You get a whole bunch of these names. They're gonna overcook and done. Yeah, usually John's right. You know, Pink Panther, when you're starting a new position, the odds aren't with you. That's the problem. Sometimes you get those names that go cuckoo. You get away with it. But the odds aren't with you. He's right. 3D names were getting hot. DDD. If you guys remember, we were talking about this on a couple of webinars. Yeah, I thought this name was the biggest piece of shit on the face of the earth. But there was like a legit Jan sweeper activity in this. That was like more like over here, I think it was. Then there's been, you know, spec action around it, a lot cheaper action. They nailed the lows on this too, so they nailed the lows on this too. And then today, a couple decent July bets. I'll tell you what I did. I bought some of this today, equity, and I held on to some. You too? Yeah, you know, because this is like, you know this name. You guys remember? This was a big winner for us back in the day. Is it breast tissue? I didn't know that. I didn't know that. Yeah, Kathy name. This name, okay, relentless sweeper activity this whole entire move. I bullshit you not. Those who were around can vouch. Every dip, every little sideways consolidation, they came in and annihilated it. The whole move. Multiple times. So, you know, today's action wasn't that type of action. It was more of spec, cheap, almost lotto action, you know? But we'll see. We'll see. You know, they probably were looking at it as a laggard play because all the other ones really caught fire. SSYS. But DDD has had the best flow. Also, this one caught some play today. XONE. You guys know this one? This, I think, is 3D. I could be mistaken, though. Anybody familiar with this XONE? It is? And, you know, I remember this, too, from back in when these things were unconscious. Smaller company. Where's the, oh, here it is. There were a couple of these. Short-term, July 25s, but decent. LB, I cannot get over. This thing was on the verge, I thought, of going bankrupt back in the day, LB. Victoria's Secret. Can you believe where this stock is right now? I can't believe it. I don't know. I haven't really been following it. Yeah, I remember it was like maybe a month or so ago, caught some sweeper activity, and I was like, oh, maybe this is, this thing's been hit hard and there's a decent spot. And I look at the chart, I said, are you kidding me? When the hell did this happen? What a turnaround. So anyway, short dated sweep. There were a couple of these LB. There were other names too. I'm going to put on here. Deck caught a real nice bet. They opened up the largest position of open interest in the name, and this is just a beast. Deck is a beast. Like, they make Uggs, right? That's all I remember from this name back in the day. Yeah. What an animal, though. I'm not joking. Uggs. The boots, Uggs. The hairy boots. Yeah, so you have just no selling in the name. You know what I mean? No real sellers in the name. Like, this thing had every opportunity to pull back if it wanted to. But, some of these retail names are just so strong. Crocs is strong. Let me see Crocs. Oh, wow. Go figure, huh? Later, Robert. Go figure Crocs. Yeah, we're just going to go over names now. That's it. I'm going to wrap it up soon here anyway. And a couple other names that I'm going to add to the list. Boeing. If they went out a couple months, what they did in Boeing, let me show you the order flow there. Because I like this type of action. I just don't like it when they're in short-term strikes. Yeah, so there were a couple different ones, 212.5s and 215s, right? I think it was. I think those were the two. They look like this. So when, like, if these were September, October, a lot of times that type of flow, that's fun positioning. And you got an okay spot. I mean, the stock's a real pain in the ass. Stock's a pain in the ass. But anyway, so you got July, which is short term, deep in the money. I don't get it, I'm not as excited as much as I would be if it was a little further out. But, if you like the name, you got a niner there, it's not a bad spot. AA was rolling today. They were rolling, but same thing there. Nice spot. They all look the same, right? They all look the same. Look, Freeport, AA, they all look identical. Apache, yeah. There's flow. Every day there's some flow in Apache. Every day. Etsy, yeah. Etsy had it into green today. Why didn't they come in here? This would have been beautiful. This thing's been dead as a doornail. This would have been ideal. Moshe just had a great question in regards to sector sentiment and positioning. So the thing with sector sentiment, positioning, like when we're looking at longer term positioning, and like you're saying, it takes more to unwind. There are trades and then there's big picture stuff. You know what I mean? So like when I look towards the positioning, I'm looking more towards big picture stuff. But what I like is when the two align, when they both are showing the same thing, that's when it's a really strong signal. So for example, we were seeing tech was unwanted, right? They were selling tech aggressively. They were rolling into commodities, financials, all the inflationary sectors. And the sentiment was showing the same exact thing. All those sectors they were rotating into were all overheated. And tech, what they were selling was flashing buy signals. So when the two align, that's when things get really interesting, you know, because the positioning is more of, and again, it's tough to say big picture stuff because things happen so quick, Moshe. That's the problem, you know, but it is big picture stuff. You know, it is big picture stuff, the positioning, where the sentiment, the sector sentiment was usually more on an intermediate time frame, but now you see what happens these days, right? You get buy signals before you know it. 2 weeks later, you got sell signals. So if that's the definition of intermediate time frame, I guess it's intermediate. It's just everything's on fast forward now, Moshe. Everything's on fast forward. You know, it's really frustrating. Everything's on fast forward. I used to like to look at that bigger picture stuff because that's the stuff I could be a lot more patient with. You know, I didn't have to be in a rush. Yeah, it really is. And, you know, you see it. It's got a lot to do with all the program and algos and everything else going on out there, right? One algo sets off another algo, sets off another algo, sets off a huge program, and before you know it, you got things in a frenzy. It is what it is. But that's the problem. You know, that's the big problem, at least for me. Because throughout my whole career, I've, you know, worked on being patient. You know, it's something I wanted to work on, being patient. And you know, you just, sometimes it could be to a fault. You be over patient, you miss things. You miss things. Like this setup that we just had, I don't miss something like that. Like usually I take a nice shot. You know what I mean? Usually I take a nice shot. And not all at once. It's because over the course of weeks, you know, I can find things to position into. You know, and that's why I love like corrections. You know, so you could buy into weakness. You don't have to do it all at once. You know, you look to be a little early and you take it nice and easy and build positions. But now these days it's so difficult. You know, it's so difficult to do. Like I said, you usually, if you're lucky, you get your hands on whatever you get your hands on at that moment. Yeah, it's exactly. There's no, you know, that's what I started the webinar with that. You got to work, not be afraid of being early, you know, when the signals are out there. You know, when you're starting to see the signs that you want to see, don't worry. And trust me, that's one of my faults. Don't worry about being early. You know, we all are afraid of being underwater initially, right? We want to buy something and we want it to go up right away. That's great for trades. But, you know, if you're going to build positions and, you know, you're going to try to make a dent off a strong signal, you can't get it done that way. You're not going to come in all in one day, you know what I mean? And start tattooing things. That's a lot of times that has a lot to do with it, you know? A lot of times that has a lot to do with it. When you're so concerned about, you know, being underwater, initially, it's because you sized up too big. Yeah, well, that's what it is, Fish. Try sizing down. And there's nothing wrong with sizing down. You understand? You start to learn a lot of things about yourself. And this is a good market to do it in because a lot of the look what we just can't like come on. You know what I mean? Like look what has gone on here. So this is a perfect market here to size down anyway. It's not going to be, there's not a lot of easy money out here right now. Right? Just based off this. I mean, look at this move. We're not going to have a sweet spot set up that we can really feel confident in. We've been talking about this until we get that wash, that reset, until it happens. Because that's going to be the risk, That's why you're worried about being underwater. You don't want to get caught in that, right? That's the fear. So, that's the problem. That's why you got to size down. That's why you got to size down on options. The equity, I mean, here and there you could use stops, but options, you're better off anyway. Yeah. And look, okay, I think, with these washes, like we got this wash last week, these things prevent, I think, ultimately the correction we're going to get. If we don't get it over the summer, the likelihood is come September, the bear comes out around that time anyway. It's coming. There's going to be a correction. I know, it doesn't look that way, but it's coming. It's coming. Yeah, and it's, it's not a bad thing. It's not a bad thing at all. Not a bad thing. It's a good thing. So it's a good time to size down anyway, no matter what. No matter what. Try to make some money. Yeah, especially if you had a good run out of this. Hang on to it. Try to grind it out, make some money. And then when that wash comes, we'll reevaluate. And then we got a lot more things lining up. We'll feel a lot more confident, Well, September, October, I told you guys the story. When I was managing client money, because I couldn't be nowhere near as nimble, I used to go into cash no matter what. I had to for clients at the end of August. Always August, the second half of that month, I used to spend raising cash, no matter what. If I missed a little more upside between, late August, September into October, so be it. But I avoided some menageries. You have no idea some of the debacles I avoided. Blowing up client books by just staying out of that period of time. So it has a tendency to, the bears, I don't know what it is. They come out right around then. Right, the end of the year, the complete opposite. So, yeah, seasonally, September into October. October is a bear killer. We usually bottom in October, no matter how harsh the correction or whatever the hell it is. But, late August into September, you got to be careful, especially if everybody's bulled up. If everyone's bearish, that's a different story. But when everyone's bulled up, you got to be careful. All right, guys, to sum up the Zoom, and I'll let you guys go enjoy your night. Keep your eyes open, right? Some of the names that are looking good right now could use a little breather, And then let's see where the action goes. Let's see where the action goes. There's a couple ways this could play out. But I think there's going to be opportunities, at least on the tactical side anyway. Yep. Thanks for stopping by as always, guys. And I'll see the majority of you mañana. Have a good night, everybody.